there, Tammy Burkhart, here to talk today about Chapter 2 and Chapter 3. I like to call it the accounting cycle. Really, Chapter 4 is termed the accounting cycle. That's when they kind of finish up the cycle. But since we're working on progressing through the cycle in Chapter 2 and 3, I thought I would go through it now. I have 8 steps in the accounting cycle. They're the 8 main steps that all accounting books recognize. Our author does add a couple at the beginning and the end, and that's fine. The first one is like analyzing transactions, that's fine. But these really are the steps that you need to progress through the system. So in my last video, I did talk about journal entries. I gave you the format for it, lots of examples of the journal entry. You work through that on the Chapter 2 homework. So I'm really not going to talk that much about that. I want to talk about posting to the ledger. We use T accounts. The book also used T accounts. And then moving to the unadjusted trial balance. So these 3 things here are all in Chapter 2. So those are all in Chapter 2. You've worked through some of those, but I want to review that before we go into adjusting entries and adjusted trial balance, which is in Chapter 3. So to start, I'm gonna do 3 different transactions. I'm just gonna do them off the top of my head, and I'm gonna progress through the 3 steps: journal entry to T account to trial balance. So the first transaction is to purchase supplies on account. So I'm gonna write it here. For $200. So I'm gonna use my blue pen. I'm going to debit supplies for $200, that's my debit, and I'm going to credit accounts payable for $200. Okay? We don't need to worry about a date. I'm just going to do 3 journal entries and go through the process. The next one is to pay rent. So I'm going to pay rent for the month. For $1,000. So rent for $1,000 for the month is a debit to rent expense for $1,000 and credit to cash for $1,000. So that's my journal entry to pay rent for the month. My last journal entry is going to be to bill customers for services that were complete. So I acknowledge that we didn't talk about what kind of services. It'll just be revenue, and it doesn't matter what kind of services. But these 3 journal entries are going to be what we're going to move through the cycle. So I'm going to bill customers for services completed. So if it's a service completed, that means I'm going to credit service revenue, but I'm going to debit accounts receivable. All right, so if you were to start a small business, this actually might be the 3 journal entries that you do in a month. So this could be if you were just starting out for maybe a tax consultant or some other attorney, or even just helping someone out doing something. You could actually just have these 3 journal entries. You bought supplies, you paid rent, and you did some work. And that's basically the 3 journal entries for your month. I'm going to now walk these through with the T accounts. So the ledger is a single account that summarizes everything that happened in that period. So we talked about this was going to be for our first month, like our first month of operation. So a ledger account is going to show everything in that first month. In this case, it's going to be a small ledger, but that's okay. We'll get the hang of it. So you do a T account for each of the accounts that are used. So I use 6 different accounts. Each of those accounts will have their own ledger account, their own T account. You put the title at the top, If it's a debit, like this is a debit, which is first and to the left, that's going to be on the left-hand side, debit on the left, credit on the right. So the supplies is going to be 200, and I'm going to credit accounts payable for 200. I'm going to go down here to rent expense for 1,000, cash for 1,000. I'm going to go here to accounts receivable. I'll abbreviate that. That accounts receivable is 2,000, and service revenue for 2,000. So you have to always make sure that you're transferring over properly. If it's a debit on this side first and to the left, then that's going to be on the left-hand side of the ledger account. And if it's second, a credit, second and indented, right, then that's going to be on the right-hand side. So I have it here, debit on the left, credit on the right. Now, since there was only one transaction for each of these 6 accounts, there's nothing really to add up, nothing to reconcile. But I do want to show you how to do that, just in case you need to do that forward. So I'm going to choose a cash account. I'll put it here. I'm just going to put a few things in the cash account. So let's just assume you had a couple of debits and you had one credit, okay? So how you would reconcile that if you had more than one number is you would add up when you're going vertically. So when you're going this way, you add. So I would add 200 to 500 to equal 700. And I would add 300 to nothing else, so it's just the 300. Now I have a total in the debit side of 700, the total in the credit side of 300. So I've added going down. Now when I go this way, I'm going to subtract, okay? So I'm going to take the difference between 700 and 300. The difference between 7 and 300 is 400. I'm going to put that on the side that had the highest number to begin with. The highest side was the 700. 700 is more than 300. So the remaining amount, the 400, goes on the debit side, okay? So that's how you would do any ledger account. They're all done the same way. You add going vertically, you take the difference going across, you put the number on the side that had the highest to begin with, the difference number, okay? Now, back to this. Since we only had one account, we'll just circle those, kind of like I circled the 400, right? I'm going to circle those 6 numbers, and now I'm going to move to step number 3, which is the unadjusted trial balance. So let's erase my journal entries. Okay, and then the unadjusted trial balance, you can just title that unadjusted trial balance. Now, all trial balances have the same 3 columns. So whether it's the unadjusted trial balance in step 3, the adjusted trial balance in step 5, or the post-closing trial balance in step 8, all 3 of them have the same 3 columns. Basically, the account name, and then whether they have a debit balance or a credit balance. Okay? So that's what it looks like. Now, the order in which they are listed on any trial balance, all trial balances are the same. They're balance sheet accounts first, then income statement accounts. So balance sheet accounts, we know, have the accounting equation. So assets are first, then liabilities, then equity, and then income statements accounts are next. So revenue accounts would go, and then expense accounts. And then if you had dividends, you would kind of sneak dividends in between. We don't have it this time, so I don't need to worry about it. So I'm going to start with my assets. Assets are always listed in order of liquidity. So I'm going to go over to my 6 accounts and I'm going to say which is my most liquid asset. That would be cash. So I'm going to write cash here. It has a credit balance of 1,000. My next liquid asset would be accounts receivable. I abbreviated over there AR, but accounts receivable. That's 2,000 on the debit side. I also have supplies as an asset. Supplies is 200 on the debit side. So that's all of my assets. Now I go to my liabilities. That's next in line. I only have one. I have accounts payable. My accounts payable, I've got a credit balance of 200. And I don't have any other liabilities. I actually actually don't have any equity items. My two equity items would be retained earnings and common stock. I don't have either. And so now I'm going to go into my income statement accounts. I'm going to start with revenue. I do have service revenue. Service revenue is a credit of $2,000. And then I have a rent expense, one expense for $1,000. Now there's no totals along the way. There's no spaces. Everything's one right after another. This is the order in which they occur. The only time you total is at the bottom. I've only got 6, right? So I make sure I count up. I've got 6 over there. I've got 6 here, so I know I'm good. Now I'm going to add these up. It looks like I've got $3,200 on the debit side, and I've got $3,200 on the credit side. Now, the trial balance is very, very important. Really, the purpose of any of the trial balances are that you equal, okay? That your debits equal your credits. Because if you know if they don't, then something has gone wrong either with your ledger accounts or, more likely, your journal entries were done incorrectly. We're okay now, so we've got the $3,200 there and there. That's all I'm going to talk about for now. We'll talk about, actually, I think I have time to do a little bit in chapter 3. Let me do that really quick. Thanks for being patient while I erase. All right, so let's move in, since we just have a few more minutes, to adjusting entries. So adjusting entries, those are 3 different, they're actually 2 different types, and each have 2 different types. So I'm going to quickly go over that, and then in my next video, I'm going to do some examples of adjusting journal entries. So adjusting journal entries, AJEs. The first type of adjusting journal entry is what's called an accrual. If you want to follow along the book in chapter 3, it's under Learning Objective 2 or page 114. The 2 different accruals are accrued revenues and accrued expenses. And that's Learning Objective 2, and they give you some examples there. I'll do some more in my next video. On page 118, or Learning Objective 3 in chapter 3, are deferrals. That's going to be the second type. And you've got, for deferrals, you've got unearned revenue and prepaid expenses. Okay, so accruals happen, accruals come about when something has occurred but there's been no transaction. Okay, so that's an accrual. A deferral happens when a transaction has already occurred during the period, but it needs to be adjusted at the end. I'm going to do one more thing and that'll be it. I'm going to do my 4 rules of AJEs. My rules of AJEs. Number 1, cash. The account cash is a debit or credit never used. Do you see how I bolded, pretend it's bold, capitalized, exclamation point, and underline? You never, ever, ever use cash. 2, it's always dated at the end of the period. So we'll do a lot of December 31st. 3, you always use one income statement account and one balance sheet account. Always. We'll talk about that when we do the examples. And then last, really the purpose, I probably should have started with this, the purpose of adjusting journal entries is you're making things right. You are putting revenue and expense in the place where it goes. So if you're operating within a period, and even if you don't receive money from your customers in that period, or if you have the lights turned on in a period and you don't pay for those lights for another couple months, you want to make sure those revenues and expenses go in the period in which they are incurred. So once again, adjusting journal entries, they make things right. Here's some other rules. But when we go through some examples, I'll talk more about how they make things right. Thanks. See you next time.